Stablecoins may not be so stable after all. We'll be talking about what happened with Luna Terra over the weekend and the future of stablecoins with our next guest, Ronald AngSiy. He is a senior VP at Intellabridge. Welcome to the show. I've spoken to your CEO, John Eagleton. First time speaking with you. It's a pleasure, Ronald.
Yeah, great to be on and great to talk more exactly about what happened. It's been a chaotic 2 days.
Chaotic 2 days for not just the DeFi space, but also for cryptos at large. We'll be talking about everything to do with what happened with Terra and, of course, the greater crypto landscape as well. But first, let's give an introduction to the audience. You are a Wharton MBA grad. Following that, you moved into the DeFi space, and now you're an expert on all things DeFi.
Yeah.
Tell us about your career transition from, Wharton's a pretty traditional financial school, one of the best in the world, but then you decided to enter into the fintech space right away. So what happened there?
Yeah, so I started my career as a management consultant, pretty traditional career path. Yeah. Then went to Wharton for my MBA. I did a startup and got a lot more successful than I thought it would be.
Y Combinator, right? Incubated, yeah?
Yeah, got into Y Combinator, raised a decent round, had a decent exit from it. So enough to pay student loans at least. And went back, graduated, and then did corporate VC for a bit. And then was a senior product leader at Humana, leading a $100 million startup initiative from them. And from there, I just caught the crypto bug and went into Intellabridge.
Okay, so you've examined the DeFi space in great detail because of what you do now. Tell us what happened. So just a quick rundown, Terra USD, UST is a symbol, is an algorithmic stablecoin, and it's lost its peg to the US dollar. It's supposed to be pegged 1-to-1, but at one point it's dropped to as low as I think 0.6 to the US dollar. Basically, it crashed. So before we get into the technical details of who attacked who, let's talk about algo stablecoins at large. There's basically two types of stablecoins, right? There's reserve-backed stablecoins and there's algo stablecoins. That's what we're talking about today. How do they work and how did the system fall apart for Luna at least?
Yeah, so there's actually many categories of stablecoins, but if I was to oversimplify it, you could either have collateral-backed stablecoins and algorithmic stablecoins. Collateral-backed stablecoins are like USDC, where for every dollar you put in an actual bank, you get a digital dollar in return. And the faith in that system is that there's actually a bank somewhere that has a actual dollar physically in a bank, so you can always exchange it 1-to-1. This is important for the stablecoin industry because it is not FDIC insured. And so actually having a dollar in a bank for every dollar stablecoin out there in the world is psychologically meaningful, but it also requires constant auditing and trust in the entity that they actually have the dollar in the corresponding bank. The second category is an algorithmic stablecoin. While what is backing the algorithmic stablecoin is not an underlying asset, but some algorithm that keeps the digital dollar to a digital dollar. And that is where instead of auditing a bank to see if it has X amount of dollars in the bank, you audit the computer code and say, against all the scenarios in the world, does this algorithm hold up? Or even if it holds up, how do external market forces affect the algorithm and can it be manipulated in any way? So those are the two main categories. UST is part of the algorithmic category.
Okay, so walk us through what happened with UST.
So I think the easiest analogy is to look at a penny stock market. And in a penny stock market, there is not a lot of trading activity. So there can be spreads in the price distortion of a given stock. Now, for a stock, that's okay because stocks are inherently volatile. And if you look at the volatility stocks and you see a spread, that comes par for the course. But if it happens to a stable coin and there is a difference between what the stable coin is supposed to be at $1 versus its actual price due to low liquidity, now it creates a crisis of faith and confidence in the stable coin itself. So the actual mechanisms of the UST DPEG are very similar to what happens in any other market. But because of what a stablecoin is supposed to symbolically represent, it was significantly more damaging to what happened there. And I can actually outline the steps and the timeline of what happened to destabilize the peg. But that's on a high level, a conceptual understanding of what happened.
This isn't supposed to happen, right?
It is not supposed to happen. So basically, in general, the whole crypto industry is about liquidity. because it's completely new. It's not like you're trading Tesla stock and there's like billions of dollars of Tesla stock being traded every day. So the price spread is relatively thin. In cryptocurrency, it's a completely new market. So there's not nearly enough liquidity for a lot of these tokens. So what happened was UST is pretty strong liquidity on its native blockchain called Terra. But UST aims to be the decentralized stablecoin of the entire world, of every chain, on Ethereum, on Avalanche, on Harmony One, on all these different blockchains. And UST sought to expand itself to these other chains. The problem was when you go to Ethereum, there's not a lot of liquidity on there. So now, since there's not enough liquidity, it's significantly easier to initiate a short attack on the stablecoin itself. And a short attack on the stablecoin can create a crisis of faith into even what that stablecoin means or represents. In this case, what happened was that there were two principal entities, right? And you can see this through on-chain analysis. And through on-chain analysis, you saw there were two entities that in a 24-hour period sold over $400 million of UST, withdrew it from Anchor Protocol, which is the main yield protocol of the Terra ecosystem. And that caused a cascading liquidation effect into the whole ecosystem and caused a crisis of faith into it.
There were two short attackers. You sent me these notes.
Yes.
The first one withdrew around $226 million from Anchor within a 24-hour period. And the second one withdrew how much?
190-ish, something like that. I have to double check the notes.
Okay, so we don't know who these people are or what their motives, right? I'm reading different theories as to what may have happened. One theory that's been circulating on the internet is that Citadel, the hedge fund, was behind this. Do you have any data to support this theory, or do you have any? Have you looked into these?
Well, guessing into the names of the entities is difficult and speculative.
We do have the wallet addresses, right? You have the wallet address here.
You have the wallet address, and the wallet address tells you exactly what happens. This is what makes blockchain so different than like the stock market, is that the stock market, you are only required to report once a quarter your holdings, and that in a snapshot view. In blockchain, you can see real time what every single hedge fund and investment fund does real time. You just kind of don't know their exact identities, right? But you know what these large wallet holders are doing at any given point of time. So, and for people who say, is this coincidental or was this a short attack? This is clearly a short attack because this whole thing started on a platform called Curve. When the Terraform Labs, the creators of this ecosystem, withdrew a lot of stable coins from Curve in order to put it in another project called Floorpool. And by withdrawing the UST, there was not a lot of UST in the pool. It made it very illiquid of a market. So someone with a large pre-existing amount of UST on Curve then swapped all their UST for another stable coin. And by doing that, it destabilized the UST because there wasn't a lot of volume to fulfill that order, and it took it off peg. By taking it off peg, it starts a cascading effect of everyone saying, wow, what's happening here? It's no longer $1, it's 92 cents. Maybe I should sell out. And it just snowballed from there.
To be clear, this was a deliberate attack. It wasn't like a bunch of people running to the bank, withdrawing their money, like a run in the bank. What if that happens? I'm not deliberately trying to bankrupt my bank. I'm just trying to withdraw my cash, right? You understand the difference? The timing of this attack coincides with several things. One,
the yield protocol for the Terra ecosystem called Anchor Protocol, going from 20 to 18.5%. That was kind of a media headline. Another one is a lot of Anchor competitors going online this summer, like Near or Tron, things along those lines. And three, the very specific timing of it, which happens to be right after Terra moves a lot of its UST off of Curve. There is kind of like a 1 week window where once everything in that other protocol called Floorpool was set up, it would have been a very large, robust liquidity pool that would have actually absorbed over 90% of the initial short attack without drastically affecting price at all. So there was a very short window where this attack could have had maximum impact as the funds were in transit and being sent over. And this was a vulnerable weakness. And then there are large, incredible sell orders, not like 1,000 accounts making sells, but a couple of accounts making multi-million dollar sells all within a very short period of time. And if you line that up, clearly intentional, right? And there's anecdotal evidence to point to this. For example, the creator of Tron, a guy named Justin, he wrote on Twitter a day before the short attack began that he bought UST. And then like the creator of Terraform Labs said, what are you up to? And then Justin said, I might have some secret plans.
So who's
One
this?
day later, this short
Justin
attack
who,
happened.
Sorry?
Justin Sun.
Oh yeah, Justin Sun. Yeah, okay.
Yeah. And then and he's the creator of Tron, which is creating a competitor protocol to Anchor. And the timing of the tweets plus the natural incentivization as a competitor, that in my opinion lines up. I don't want to make any accusations, but you can look at the anecdotal evidence and you can paint your own picture. That's one. The second thing is whoever sold Bitcoin to Do Kwon as an OTC order is also a suspect, because they then received a lot of UST in exchange for the Bitcoin sell to Do Kwon and Terraform Labs. So whoever, we don't know who it is. It might be Citadel, it might be someone else, but whoever owned that UST had enough UST to initiate this attack. And so that is something, that maybe someone will unravel through sources or whatnot in the future, but that is also a logical explanation.
Okay, I want to go back to the mechanisms of this attack, but before we do, suppose somebody is found to be the culprit. Would that person be legally responsible? Would there be repercussions? Is the SEC looking into this? This is a relatively new space. I mean, what's going on in the regulations front?
Well, I don't think anything happened to George Soros, right? After he destroyed the Bank of England, he just played by the rules of the game. And with cryptocurrency being so unregulated, there is opportunity for a lot of short attacks to occur, because most people do not have nearly the information as the large institutions that are involved in space that all have an army of math PhDs and computer science PhDs constantly evaluating the whole ecosystem, finding for weakness areas. And again, I want to stress, Terra was not taken down to an exploit or a smart contract flaw. Terra was taken down to a larger macroeconomic weakness, taking advantage of that market, taking advantage of a timing window in transit, kind of like a bank heist. It's like a bank heist or whatnot, right? And they said, here is a company that's perfectly legitimate that we can just destroy and make a whole ton of money out of. Okay. And they took the window and it was successful.
And just tying it back to the mechanisms of the attack one more time. So you likened this to the George Soros attack on the Bank of England in 92, famously known now as Black Wednesday, where George Soros shorted the English pound and basically forced the currency to devalue tremendously overnight. Is this kind of, from a high level perspective, kind of the same thing in which an attacker deliberately shorted the currency in question, in this case UST, and forced it to depreciate?
What you saw that these attackers did is all they did was a catalyst. And then as a catalyst, there were cascading liquidations and sell-offs in fear. Similar to George Soros did not destroy the pound himself. He was just a catalyst that caused a massive sell-off in British pounds from various currency traders once that happened, and forced the Bank of England to intervene in that scenario. Right. So in this scenario, they simply started the attack on Terra. And then from there, there were a lot of people that naturally sold off. What I will say is, in the cryptocurrency space, there's a lot of questionable activity on social media, like robo articles or completely new social media accounts that say negative things like, oh, is Terra going to fail and collapse? I even made a Twitter thread where I showed one of what those accounts looks like, right? And a screenshot of it. And you see with social media, you can easily amplify fear. And this is part of today's environment. To see that happen, it makes it easier for sophisticated institutions to invest a little bit of capital in some of these like black hat agencies and cause a series of cascading liquidation effects. And because cryptocurrency is a global market, you can have these players initiate these attacks in countries that are also unregulated, that it's hard, even if you spot them, to have regulatory jurisdiction to properly, go after them.
Okay. I want to touch on what the recovery plan is right now from UST, from Terra Labs. Now, again, going back to the analogy with Soros, the Bank of England had to intervene. Well, what's the intervention plan now by, I guess, Do Kwon's company?
So there were intervention plans that they lined up multiple investors. What Do Kwon publicly said was that the price fell too far too fast. So typically, if you go to investors, you say, hey, can we raise a bunch of money in cash and we'll give you a bunch of our cryptocurrency at like a 50% discount? And then investors will say, yeah, sure, I'll step in. But when that happens, what is the price of which you get a 50% discount? Is it at like 20? But then like 1 hour later, it's at 15. And then 1 hour later, it's at 10. And 1 hour later, it's at 5. And when you have to close all the legal paperwork, like how do you figure that out? So the knife kept falling too fast, and all of those negotiated deals that they had no longer became valid because it started scared. I'm guessing.
Who's going to bail them out? Who's going to bail them out?
Yeah, at a certain point, the people who had agreed to give the commitment to them might have changed their mind and said, just kidding, I'm out. Or might have been so volatile that you could never get terms right on an investment decision, and it leads to renegotiation. And sometimes it could even be the firms you're negotiating with. You talk to a VC to give you a lot of cash in order for a token, and the VC as an incentive wants to short the token so it gets a better deal in its negotiated work with Terraform Labs. Now, because there was no deal that ended up being publicly made, that might have not occurred because it fell too far too fast. But I'm just pointing out different scenarios of what could happen if we're just to make a best guess.
Do you think Terraform is going to go back, or Terraform Labs rather, is going to go back to the drawing table after this incident, redesign the algorithm, make it less susceptible to such an attack in the future?
Yeah, they have already said that they're looking into adding collateralization as part of their stablecoin model, something similar to
Well, then
Frax.
it's not an algo stablecoin then, right? I mean,
it's no longer. It would be more kind of like a hybrid algo collateral-backed stablecoin. We'll see what it exactly looks like.
Because Do Kwon's been adding Bitcoin to Terraform for a while. Like he bought a sizable amount even before this attack. I'm not saying he foresaw this to happen, but he was on the transition already, right?
Yeah, you could say that he was making a transition and he was using it to defend the peg. There's a lot of analysis that still needs to be done because this has all happened fairly recently. But my personal opinion as of this very moment is that the reserve fund, Bitcoin funds were deployed too early on when it didn't have as much of an overall percentage effect on the market. And thus they used that bullet, they fired that bullet before it became incredibly effective. They did it when Luna was at like $30, not when it was at $3. So the impact to that was not as material as it could have been.
What is your personal view on the inherent stability of algo stablecoins? I mean, if the founder of one of the world's largest stablecoins has to feel the need to collateralize to defend the peg, doesn't that indicate a lack of confidence from him that algo stablecoins work?
So all cryptocurrency, whether it's stablecoins or Bitcoin or Ethereum, are ultimately a function of belief in them. And all money is a function of belief. It's just that the US dollars is backed by our GDP. It's backed by in the brand and our geographic supremacy. It is backed by nuclear weapons, right? And that creates belief in the dollar, and with like the Bretton Woods Agreement, having it as a reserve currency of the world, as agreed by like 44 countries back then in that agreement. So when it comes to cryptocurrency, it's where is the belief? And this is what makes Bitcoin so special, is that it has strong amounts of belief, and you could say it maybe has crossed the tipping point of having that critical mass where that clock is not going to get unwound. You look at, all these other cryptocurrencies. Has Ethereum reached that tipping point? I don't know. Has Avalanche or Solana reached that tipping point? I don't know. So there's no mathematical number like a PE ratio that tells you that. It's just a matter of where you think a sufficient belief is there to withstand it. The Terra Luna token and the UST token were both top 10 cryptocurrencies.
That's
Luna
right.
was actually even top 5 at one point last month. And so, you could say that there is sufficient belief in 2 top 10 currencies in the same project.
Yeah.
But to see that taken down in 2 days,
Right.
it just has to make you take a step back and reevaluate what actually is safe in cryptocurrency. Is the whole thing a giant startup with an incredible risk profile normally reserved to venture capitalists?
Right.
So it's something to think about.
Well, just to clarify for the viewers, in case they're confused, Luna is not a stable coin. It's just
Luna is a volatile currency that uses the stable coin UST. It's a balancing act where the more UST is created, the more Luna has to be burned or destroyed in order for the UST to be created. That's the algorithm. But it's reciprocal. The more UST is sold off, the more Luna supply is created. So what you saw is the Luna supply went hyperinflationary over the last 2 days because everyone kept selling their UST because they lost faith in the peg. So the price of Luna incredibly went down to the supply flooding the market and not enough people buying the Luna token.
Yeah, it went from, I think, it was, I can't remember the exact percentage, but it nosedived. Okay, so let's talk about faith in stablecoins at large, and then we'll close off on cryptocurrencies. Do you think that this incident has alerted the general public on, first of all, the dangers of stablecoins? People have known that something like this could have happened. To my knowledge, this is the first time it's happened to this kind of scale. Now, do you think people are starting to say, you know what, maybe stablecoins aren't a great idea. Maybe I shouldn't put half my salary into a stablecoin and yield farm that? What do you think is going to happen going forward?
Yeah. So if you look at it, there is a lot of vested interest against algorithmic stablecoins. Because if you look at the competitors, you look at collateralized stablecoins, a lot of collateralized stablecoins are centrally owned, such as USDC, where the US government can easily control USDC because it is owned centrally by a company called Circle. And you could say, here is an activity that I find suspicious or what we think is terrorism activity. Can you shut off that wallet? And in a collateralized, centralized stablecoin, because most collateralized stablecoins are centralized, you can do that. That sort of defeats the ethos of decentralized finance of not relying on a intermediary or a centralized trust source in order to facilitate a transaction. But in that case, why don't you just use Facebook and Google and like Amazon coin or whatever, right? Because that is inherently more cost efficient than any decentralized system where you have to make copies of a transaction on thousands of computers around the world, right? So that is something where if you look at CBDCs, at collateralized, centralized stablecoins, there is a lot of vested interest from perhaps banks to have their own banking stablecoin. That maybe the U.S. government does provide FDIC insurance. It's still so early on that we don't know how the space will evolve. It's just that UST had many of the same ethos and properties of Bitcoin, just applied to a stablecoin instead of a finite asset like a store of value. And it's really unfortunate that it did not really work out because a lot of those parallels are so similar in what it was trying to achieve in the decentralized world.
One thing I'm still confused at, why did Do Kwon add Bitcoin as part of his collateralization reserves? Why not US dollar?
So when you have, first of all, Terra is meant to be decentralized. And being decentralized, you want everything to be decentralized. It's like a single point of failure. If you have a whole DeFi ecosystem, but a centralized stablecoin in the DeFi ecosystem, now the whole DeFi ecosystem can be controlled by a central entity, right? If you have a collateral for UST backed by dollars, is that in a stablecoin that is centrally managed by someone? Is that physical cash in a bank that can be seized or requested by a certain government? At that point, you are now as susceptible as a USDC, right? And I have no problem against USDC personally. I'm a fan of USDC. It's just a different value proposition than what a stable coin like UST provides.
But
so a decentralized,
sorry, keep going. Yeah.
So a decentralized stable coin backed by a decentralized store of value in Bitcoin made theoretical sense, and not as a way to redeem UST for a dollar equivalent of Bitcoin. It was never meant to work that way. It was simply meant that if things went wrong, the BTC could be used as a way to purchase a lot of Luna and create demand for, purchase a lot of UST and create demand for UST to reinforce the peg, not back the peg like a tether where theoretically you could get an actual dollar back.
Okay,
Yeah.
so because there's a lot of confusion on the internet on this as well. He wasn't trying to back UST to Bitcoin. He was just using
Not for
Bitcoin.
redemptive purposes.
Right.
Only used as
Okay.
a way to help stabilize the algorithmic stablecoin itself.
Well, do you think that these attacks that happened over the last couple of days, do you think those attacks exacerbated the price decrease of Bitcoin? Was there any relationship whatsoever?
Yes, because you saw that the Bitcoin market decreased greatly, and if you get into the speculation, you would say the crash on Bitcoin was the massive sell-off in Bitcoin was part of a way to stabilize UST as a way to force Terra to use their Bitcoin reserves. And once Terra loaned out its Bitcoin to an entity to use to buy UST, that entity took all the Bitcoin it received from the loan and shorted that entire amount. And by shorting that entire amount, it pushed the whole market down, destabilized UST, so it got off pay. Now the entity could repay the UST loan at a fraction of a discount and collect all the difference in money. So there's a lot of tribalism in cryptocurrency. And what I think, I find that disheartening because so much of cryptocurrency is going against the same thing, which is the centralized finance world.
Yeah.
And the entities that really control the centralized finance world. And the fact that there's so much tribalism because it's like people's money going up and down compared to other people's money.
Yeah.
Creates a toxic environment that I wish it wasn't so, but I don't see any fix to that anytime soon. When if you take a step back, UST and Bitcoin were on the same side of the war and a decentralized battle against the traditional finance world. And it's really a shame what happened with the Terra ecosystem.
Okay. Well, we'll have to follow up on what they do next. That was a great overview, Ronald. Before I let you go, overview of the crypto space at large. You're no stranger to the fact that prices have been falling dramatically. Summarize for us in your own thesis why the market is in a definitive bear market where it has been over the last couple of months. Is it just because it's tied to macro news? Is it just because it's been tied to the performance of tech stocks, as some institutional investors might say? Or are there other variables at play? You mentioned lack of confidence. You mentioned tribalism. Esoteric factors related to cryptos. I'm just curious to get your take.
Yeah. So we are a publicly traded company at Intellabridge, and we use blockchain technology, and we are not deviating from that anytime soon. We're actually leaning in to that by deploying our treasury now into various crypto funds in order to take advantage of this situation. So we're actually leaning into this scenario, right? And if you look at this, I would say do not look at the blockchain industry by the price of the cryptocurrencies themselves, because you can use through on-chain analysis to actually measure what's happening and see who's involved. It's an incredible field. I recommend a lot of people bone up on. What's more important than the price of the token is the number of job openings in the space, is the number of investment into the infrastructure into the space. When you look into those things, it shows you that the industry is only growing. And the only difference now is that you have large entities that are trying to get in. And by trying to get in, they want to get in at the most economical, reasonable prices possible. And it's easier for sophisticated institutions in order to launch attacks or events like this in order to enrich themselves. So I'm not even saying Terra is dead. Terra can definitely come back, right? But this created a great opportunity for any fund that might be interested in the ecosystem. And it doesn't even require like a Citadel or a BlackRock to even get involved. This attack started on $400 million, which an individual wealthy person could have initiated that attack, right? So that shows you how early the whole crypto market space, that an individual could have initiated an attack and taken down 2 top 10 cryptocurrencies by market cap globally. Like that is something that everyone should keep in their mind when looking at anything in this entire space, even at Ethereum and Bitcoin. Because if any like large institution like a Fidelity or BlackRock wants to get involved, they could do this with Bitcoin, right?
You've highlighted a risk that a lot of people in DeFi and cryptos are probably reluctant to admit, but everyone has in the back of their minds, is that, yes, there's 2 sides of the decentralized coin. Meaning, yes, there's no central authority controlling the flow of capital, but like you mentioned, very wealthy individuals or very large institutional investment firms do have the ability to move markets at will if they are fully invested and have sufficient capital. And
especially since this market is so unregulated, right? And that's the thing. Everyone wants a decentralized world that is capitalistic and free. But the moment anything goes wrong, like a short attack destroying your entire life savings, or you losing your money to a scam or a phishing attack, now you ask for authorities, now you ask for help. And it works both ways, right? With credit cards, you can go and file a dispute if someone files a claim against you, and you have the letter of the law behind you defending you, right? In cryptocurrency, you do not have that. So it's very much based on your research and your trust and understanding the risk, right? And only investing what you're willing to lose.
Is this space going to stay like the wild, wild west forever, Ronald?
Forever is hard. It's a very long timeline. Seeing how evolve will be interesting. Seeing how existing institutions come in and become a more prevalent part of the space will also be interesting to follow. And seeing what is regulatorily compliant and acceptable will be interesting to see. Right. So, there's a lot of unknowns. The key is to look at things in Bayesian probability. Do not say it's black or white. It's shades of gray, 30% chance of this, 5% chance of this, 15% chance of this. It's about asking yourself, what is your personal risk tolerance? And what is your position in your own personal life and what you're willing to risk versus what the reward for that. Not financial advice, just do your own research and how I personally view things.
Would you buy UST right now, today?
UST, the best upside for that is just returning to peg, right? I think Luna is something that definitely has that higher upside potential. And I have bought Luna at $1 this morning. So yeah, not a huge amount, but I have. And I have not sold any of my own personal Luna.
Well, no one's trying to get rich on UST, but I think where I was going with the question is whether or not you still have confidence in this system.
Yes. If you look into UST's peg mechanism, for it to permanently depeg, you basically need to shut down all network activity for like 3 months or something, because UST Terra transactions on the Terra blockchain have transaction fees that feed into the system itself. As long as there are fees from transactions being fed into the system, that mechanism will create a natural self-healing return to the peg. So for UST to be permanently depegged, even if every single government in the world says UST is banned, and every single government in the world says every decentralized exchange like Uniswap cannot list UST anymore, if they had the magical wand ability to do that, like half of the exchanges on Uniswap don't even occur on the user interface. They occur on the API and on the backend connections, right? So how do you shut off all Terra network transactions? It would actually require something like a smart contract failure for that takes the network down for a long period of time for USD to be permanently depegged, which did not happen in this scenario. The mathematics still worked. It was the psychology that took down Terra. And so the UST will return to peg, but the more important question is, do people return to Terra? Does the investment money return to Terra? Do the developers return to Terra? That is a more outstanding question that I have a more bleak opinion on right now. I don't think it is totally dead. That's why I bought more Luna today. But I think it is a significantly more of an uphill battle now.
Okay. So bottom line, it'll return to peg. The confidence in stablecoins, particularly algo stablecoins, have been eroded by this incident.
And the total usage of it, the price of Luna token, the ecosystem and infrastructure built around Terra is what is at risk. That's the important question to ask, not the academic question of will UST return to like $1 theoretically.
Mm-hmm. Okay, good. Ronald, excellent interview. Thank you so much for coming on. I'll speak to you again soon.
All right. Thank you so much, sir.
Thank you for watching Kitco News. I'm David Lin. Stay tuned for more.